Hello and welcome to my channel. In this tutorial, I'm coming to walk you through the standard workings required to solve any consolidated financial statement question. And in this particular video, I am looking at complex group structures. And the type of complex group structure I am looking at in this video is the vertical group structure. The vertical group structure. With the vertical group structure, we are talking about a parent buying shares in a subsidiary, and that subsidiary also owns shares in another subsidiary. So there are two subsidiaries with one parent. So a parent has bought shares in a subsidiary, and that shares gives control over that subsidiary, and the subsidiary that is being controlled by the parent also controls another subsidiary. So that is what we call, and it considers that the parent also controls the subsidiary of the subsidiary. So there is an indirect controlling interest over the subsidiary, which is the S. So that is what we mean by vertical group structures. So in this video, basically what I'm coming to do is to walk you through an example of how the consolidated financial statement question. So in this particular question, we have the statement of financial position P, S, and SS drafted as below. So we have sundry assets, we have shares owned in the subs, we have equity capital, we have retained earnings, and then we have liabilities. Right, so the following additional information is relevant. So P acquired $75,001 shares in S on 1st January 2022 when the retained earnings of S amounted to $40,000. At that date, the fair value of the non-controlling interest in S was valued at $38,000. S acquired $40,001 shares in SS on 30th June 2022 when the retained earnings of SS amounted to $25,000. The retained earnings of SS had been $20,000 on the date of P's acquisition of S. On 30th June 2022, the fair value of the non-controlling interest in SS, both direct and indirect, based upon effective shareholdings, was $31,000. Goodwill has suffered no impairment. It is group policy to use the full goodwill method. Alright, so this is our question that we are going to use to illustrate the five standard workings model of solving complex group structures. Alright, so in our question we have P, which is the parent, buying shares in S, and according to the question, we are saying that P acquired $75,001 shares in S. So how many shares are in S? We have 100 shares in S right here. So there are 100 shares in S, and we bought 75,000 of those 100 shares, 1,000 shares. Please mind you, this is 100,000. 100,000. Alright, so this implies that P controls 75,000 out of the 100,000 shares in S. So that is 75%. That is 75%. Convert it to percentage. Alright. Now, from the question, we also understand that S also acquired $40,001 shares in SS. Now, how many shares does SS have? SS has 50,000 shares. Right here, 50,000 shares. And SS has bought 40,000 out of the 50,000. And so S controls 40,000 out of the 50,000 shares. And that is 80%. So you can copy this and paste the format right here. So format. Okay. That will be 80,000. Alright. So P acquired 75% of the shares of S. S also acquired 80% of the shares in SS. Now the question is, how many or what is the control of P over S? Because earlier I said that in a vertical group structure, P controls S, S controls SS. However, because P controls S, P has an indirect control over S. So, since P controls 75% of S, it implies that P controls 75% of the control of S over SS. This is what I mean. So, for P over S, I'm doing it right here. Is it going to be 70%? Is going to be equal to the 75% we have here multiplied by the 80% we have here, and that is 60%. I'll go over again. So P controls 75% of S's shares. S also controls percent of SS's shares. Now, because P controls S, P has an indirect control over S, and that control is ascertained by multiplying P's control over S's control in SS, and that is what we have done here, and we got 60%. Alright, so another issue in complex group account questions is dates. So in this question, we say that P acquired S on 1st January 2022, and that's the beginning of the year. Alright, now S acquired SS on 30th June 2022, and that is at the middle of the year. That is at the middle of the year, and so we will start consolidating S's accounts in the accounts of P from 30th June 2022, because this is the date on which S acquired control over SS. Hence, SS will start to appear in the consolidated accounts of P from this particular date, from 30th June 2022. Alright, so that is it. So we can actually put those there. This was acquired on 1st January 2022. This was acquired on 30th June 2022. think a better way of putting it here. Copy this. So let me just put it by their percentage holdings. Cut and paste it here. This 60 could come here. Alright. Then the 60% will be used from 30th June 2022 because that is the date on which we acquired. We'll start consolidating SS in P's account. Alright. Okay. So that is it for the group structure. Now we come to the net assets schedule. This is the second standard working whenever you are solving a group or consolidated accounts question, the net asset schedule. So we have the net asset schedule is a list of all the assets of the subsidiaries that the parents control. So the net asset schedule of S and SS. Alright, so of S and SS. So we can put S here and then we can put SS here. Okay, so let's cut it. Put it here. Alright. This is in thousands of dollars. It's in thousands of dollars. Just change this to text. So it's in thousands of US dollars. Cut it. So copy, come here, paste. Okay. Now we are going to start with the share capital. So in the net asset schedule, we always start with the equity capital or the share capital. So we have equity capital, and then we will have at reporting date. We have at reporting date. Sorry, after reporting date, at acquisition, and then we also have the post acquisition. The same thing applies to all of them. Copy, paste right here. You can copy this, cut it from here, and paste it here. You can copy this, cut it from here, paste it right here. Cut it from here, paste it here, copy to the right. Alright. So we have our equity capital. Now at acquisition, the equity capital at acquisition can be found in the balance sheet. The equity capital at reporting date can be found on the statement of financial position, and here for S is 100 for SS is 50. All right, and then the retained earnings are 60 and 30 respectively. All right, so we have 100 for S and then 50 for SS. Then we have the retained earnings, that is 60 and 30 respectively. So we have retained earnings. All right, so we have the retained earnings there. Then at acquisition, we are told that P acquired 75% $1 shares in S on 1st January 2022 when the retained earnings of S amounted to 40,000. So it means that as at the date of acquisition, the retained earnings of S was 40,000. Okay. Then we are also told that S acquired 40,000 shares in SS on 30th June 2022 when the retained earnings of SS amounted to 25,000. All right, so they have been given straightforward. So the first one was 40,000 and then the other one was 25,000. Now, we are not told any other information about our equity shares, so we assume same. There has not been any change in the shares. Okay. Then the post acquisition is the difference. You subtract the asset at acquisition from the asset at reporting. You subtract the asset at acquisition from the asset at reporting to obtain your post acquisition reserve. So this is equal to this minus this. This is equal to at reporting minus acquisition, and that is 5. All right, so that is it about our net asset schedule. Now, what again come into our net assets schedule? We have such items as other components of equity. We have provisions for unrealized profits on inventory, where sub is the seller. We might have fair value adjustments, of PPE, among others. So these are other items that you might see that we treat under the net assets schedule. So in a question where you have these items, always treat them under the net asset schedule. Now, the benefit of always generating your net asset schedule is that it helps you in your goodwill calculation, your NCI calculations, as well as your group retained earnings. Let's see how that goes. All right, so this is what we have. So we can actually sum these ones, and a quick way to sum in Excel is to use alt equals, and that will automatically sum all the values above the sum function for you. So I just hit enter and then it sums it for me. I'll just copy the formula across and then it sums everything for me. Now we are not interested in these ones. Holding control, can select all these ones and delete. Alright, just insert another A there. Okay, so now the goodwill calculations. Goodwill, we are talking about the excess of the purchase consideration of a business over its um, value of the net assets. The excess of the purchase consideration of a business over the value of its net assets. That is goodwill. So that is all what we are doing here. So we start by purchase consideration. Other books may use cost of investment. Is the same thing. Cost of investment is the same thing. Okay, so we have the purchase consideration, and then we are going to do it for each of them of the subs. So we have sub S here, and then we also have SS here. Okay, so there's purchase consideration. So let me just copy this. Let's copy this and bring it here. They are all in thousands of dollars. They are all in thousands of dollars. So let me just bring this one down. Cut it. Paste here. Alright. So we start with our purchase consideration. This is the amount of money we paid to purchase the shares in the subsidiaries. The amount of money we paid to purchase the shares in the subsidiary. Alright, so we have in the question, we have them right here in the statement of financial position. The statement of financial position. So this is the amount of money we paid for the 75,000 shares we bought in S. Okay, and then this is the amount S also paid for the shares bought in SS, 80,000 and 120. So we'll come here. The purchase consideration paid by S is 120, and then that's the one paid by P is 120, and the one paid by S in SS is 80. Okay, then what we will do is that, because remember this is in the account of P, this is in the account of P, and from our group structure, P only has 60% interest in SS, which means that P does not control all of SS. P does not control all the shares of SS. So we have what you call the indirect hold adjustment. Indirect holding adjustment. Indirect holding adjustment. So with the indirect holding adjustment, we are talking about P controls 75% of S, and so the NCI in S is actually 25%. The NCI, the non-controlling interest in S, is actually 25%. Now this 25% is the indirect holding in SS. This 25% is the indirect holding in SS. And so in calculating the goodwill, we will multiply this indirect holding adjustment with this particular amount, subtract whatever we get to get our actual holding in SS. So this is what I mean. We'll come here and do less indirect holding, okay, holding adjustment. So adjustment. And this is what we will do. We'll have 25% times the 80. So we'll just do it 0.25 multiplied by this 80 here, and then we get 20, but it's supposed to be a negative figure because you are subtracting it. Okay, so we less it. Another way of doing it is we could actually strike just 75% of this particular amount and put it right here, so that we will forget about the less indirect holding adjustment. However, for understanding purposes, this is how we do it. Okay, so we have alt equals sum, come here, alt equals and sum. So we have 120 and 60. The next thing to do here is to add our fair value of the NCI at acquisition. To add the fair value of NCI at acquisition, and that has been given to us in the question. So let's go back to our question. At that date, so we are talking about P and S. Say at that date, the fair value of the non-controlling interest in S was 38,000. All right. So we have 38,000 for S here. Then how about SS? We go back to our question. So when of S retained earnings of SS amounted to 25,000, the retained earnings of SS had been 20,000 on the date of P's acquisition of S. Now let's look at this question. The retained earnings of SS had been 20,000 on the date of P's acquisition of SS. This particular statement is irrelevant for our analysis. It's irrelevant for our analysis because as at the date P acquired S, S had not acquired SS, and so therefore the retained earnings of SS prior to S's acquisition of SS is irrelevant in consolidation, and so we have nothing to do with this particular statement. See, in accounting, every statement has a purpose. I mean, every sentence you see in any question has a purpose. But in this particular scenario, it turns out that it had defied the odd. So we are not dealing with that. Now, on 30th June 2022, the fair value of the controlling interest in SS, of the non-controlling interest in SS, both direct and indirect, based on their effective shareholdings, was 31,000. And so the NCI for this particular one is 31,000. 31,000. I think I have to insert some borders to make come here, insert the border, and insert a border, insert another border here. Alright, so this should be equal to So it has not selected everything. So I can hold shift and select it. Hold shift and then I'll use the up arrow to select the top value. I'll come here. I can actually copy. So holding shift and the right arrow, I'll just select the entire here and control R. And that will copy the formula for me. Alright, so we have that. Now I said that goodwill is the excess of the purchase consideration over the value of the net assets of a business. And so therefore we have gotten our purchase consideration. The total purchase consideration is 158 and 91. 158 and 91. So what you will do is you will have to less the value, the fair value of the net assets which we got from our net assets schedule. So less the fair value of net assets at acquisition. At acquisition. At acquisition. So this is supposed to be a negative value. So this is the fair value of S at acquisition is 140. I'll bring it here. This one for SS is 75. I'll bring it here. Okay. Is left is what? So we can calculate our goodwill at acquisition, and that is the equals to the sum of the above. Is the sum of the above. So we have 18, and then I'll also copy down here. You have 16. Alright. So what other thing can come here? What other thing can come here? What can come here is what we call impairment. If there are any impairment of goodwill in our question, we are told that goodwill has suffered no impairment, and that is why we don't have an impairment here. So assuming we have impairment, we would have subtracted our impairment from the goodwill at acquisition to get our goodwill reporting here. To get our goodwill at reporting. So this is it. Let me just insert some. Let me insert a border. Make it easy for us. Alright. So that is it for our goodwill. And then the non-controlling interest. The non-controlling interest. The same thing. So I'll just copy the whole of this. Copy. Paste. Okay. Now we start with our fair values. Fair value of NCI at acquisition date. At acquisition. And that can be gotten from right here. So just can copy it over. I think I should actually remove. I think I should actually. Okay, it's fine. Alright, so we have our fair value at acquisition, and then we will less the indirect again, right again. This less indirect holding adjustment here. Just copy it, paste here. Right. So we'll come to less the indirect fair value adjustment, which is equal to this value right here under S. Under S. So we have that, and then we also have our share, the share of the NCI share of post acquisition profits. Post acquisition profits. So for our S, we know from the group structure that the NCI is 25%. So this is our control. So from our group structures, this is what we call this is 3% here. It's what we call the effective controlling interest in SS. Then the effective non-controlling interest in SS will therefore 40%. That will be 40%. That will be 40%. So our NCI share of post-acquisition profit, this will be equal to our NCI in S is 25% from our group structure. It's 25% from our group structure here, right here, 25%. So we have 0.25, which is 25%, multiplied by our post-acquisition profit, which is 20, right here. So this is the advantage of always drawing or working your net asset schedule out. When you work it out, it will help you in goodwill calculation. As you have seen right here, we've gotten all these values with the help of our net asset schedule, and we are also getting our post acquisition profits right from here. Okay, so that is it for S, and then for SS, it is going to be the 40%, which is the effective non-controlling interest. The 40% multiplied by our post-acquisition profit, which is 5. So we have 2 there. Okay, so we have 2. So we can just add everything together, alt equals, and then I'll copy my formula to the right. Alright, so this is it. I'll come to home and insert some border to make our work clearer. Okay, so we have that, and then the last here is the group retained earnings. Now with the group retained earnings, we always pick 100% of the retained earnings of the sub, of the parent, 100% retained earnings of the parent. So we have 100% of P, and that is our question. in our question, that is 100,000. We write 100,000 right here. In our question is 100,000. So retained earnings of our P is 100,000. All right. Then P's, or let me say group, we continue with the group share of S's post acquisition profit, of S's post acquisition profit, and that will be equal to P has 75% share, so we have 75% of the post acquisition reserve of S. Okay, that is 15. And then we also have the same thing here, so I'll just copy this and paste it here. But instead of S, we will have what? Instead of S, we will have SS. Okay, and that will be equal to 60%, which is the effective shareholding. The effective shareholding in SS multiplied by the post acquisition reserve, which is 5. So I'll put it here. And in this particular question, I think that is all. That is all. So I'll just sum everything together. So equals sum, and then sum everything together. So that is 118. 118. Set some borders here. I think for my net assets. So insert a border there for our net assets. Okay. So this is the 5 standard workings that are very helpful whenever you are solving a consolidated account question. And this particular structure, remember, is for vertical groups. So here, right here, vertical groups. So this is the structure. For the mixed or the D group structure, the treatment is not so different, but there are slight differences. So we'll be looking at it in our next video. Alright, so let's quickly look at how we will how our consolidated financial statements will look like. So we have consolidated statements of financial position as at 31st December 2022. So we have what? Cut it. Come here, paste. So we have P group, P group, right here. Just underline this nicely. Alright, so we have our assets. We have our assets, and then from our question, we'll have parent, we'll have sub, we'll have sub, and then we have okay. Okay, so for our parents, we have this equals the assets right here. And then I can even copy it to right here. Then from our assets, we will have goodwill. Now our goodwill, because it's for S and SS, so equals our goodwill. We have 18, and then 16 for SS. So the group will be the same. We can use alt equals. Remember, alt equals work anyway, so just add everything together, and I can even copy the formula down by using Control D. Okay, so we have our goodwill there. Then we can find the total here. Alt equals, our total is right there. Okay, then we have our equity and liabilities. Equity and liabilities. So with our equity and liabilities, we have the equity capital. For that, we pick only that of the parents. Only that of the parents. So that is 200 right here. So we can just do it equals, just write 200 there. And then we can also have our retained earnings. We have our retained earnings here, and that can be gotten from our workings. The workings 5. Okay, then we'll have our NCI, and that we can get it from our NCI calculation in workings 4. So we have this plus this right there. So in order to make it very simple, I'll put U here. So you have the sub as 23, and this the sub is 33. And we have that. So I can make it alt equals. Alt equals, and that's 56. Then I can sum alt equals, sum it together, and then I will add my liabilities. We have liabilities right here, 100, 260, and 50. So we have our liabilities. Alright, so we have 100 this, so I'll do alt equals to sum them, and then I can find the sum of those two. So equals sum of these two figures here. So we have equals this plus this. 2624. So our balance sheet has balanced. Balance sheet being balanced here. So I can actually have all of this. I have this. And then also I have this set right here. All right, so this is the 5 standard workings that you use in solving any consolidated financial statement question, specifically the consolidated financial position. So the first one is to determine your group structure, which you have right here. The next is to draw your net assets schedule of the subsidiaries. So if there are more subsidiaries, you add them like this. And then for that one, you bring your equity capital, you bring your retained earnings, you bring other reserves, you bring other components of equity, you bring provision for unrealized profits on inventory where the sub is the seller, you bring your fair value adjustment of the of any PP, and then also even depreciation on PPE adjustments. Okay, depreciation on PP adjustments will all come there. Alright, then you have the third working, which is the goodwill at acquisition. That you start with your purchase consideration, you less your indirect holding adjustments, that is for complex group structures and vertical vertical group structure. You add your fair value of the NCI at acquisition, you less your fair value of that asset at acquisition, goodwill at acquisition, and then if there is any impairment of goodwill, you'll subtract it to get goodwill at reporting. Then the fourth working is the non-controlling interest, where you start with your fair value of non-controlling interest at acquisition, you less your indirect holding adjustment from the sub that purchased the sub. So under the goodwill acquisition, you subtract the less indirect holding adjustment from the sub, but under the non-controlling interest, you subtract it from the sub. Alright, take note of that. And then the group retained earnings. You start with 100% of the parent group share of, and then any other components that might come here are provision for unrealized profits on inventory where parent is the seller. Parent is the seller. Alright, so we have that. Okay, so this is it. Thank you very much for watching. I hope that this video will help you in your consolidation of group financial statements, specifically vertical complex group structures. I hope to see you in my next video. Thank you.